Welcome back to Small Caps. My name's Kerry Stevenson, and today I'm bringing you a very interesting story all about high purity alumina. And here to discuss the company, it's called Altech Chemicals, and the code, the ASX code is ATC, and they're also listed on the Frankfurt Exchange, and on the Frankfurt Exchange they are ABY. Joining me today is Iggy Tan. He's the Managing Director. He's going to explain to all of us why we need to sit up and take notice of what Altech Chemicals are up to at the moment. Welcome to Small Caps, Iggy.
Morning, Kerry. Nice to see you again. You look fabulous.
Oh, flattery will get you everywhere, my friend. Now, this is the first time you've spoken to our audience about Altech Chemicals. So if you could start by just giving a bit of an overview of the company and what products you have.
Great, thank you, Kerry. Altech Chemicals is an Australian company. We're listed on the ASX as well as the Frankfurt Stock Exchange. And our vision is to build a 4,500 tonne per annum high purity alumina plant. Now, if you remember your chemistry, Kerry, alumina is actually aluminium oxide. And what's interesting is that we are making a product that is 99.99% purity aluminium oxide. Now, why is that important? Because that is used as a feedstock today to make synthetic sapphire. So the watch face or your camera lens or bulletproof glass is actually sapphire, gemstone. It's nearly as hard as diamond. Diamond has a hardness index and then sapphire is just below it. Now, they use high purity alumina to make these synthetic sapphire. The growth is actually as a substrate for the LED industry. So if you imagine LEDs, it's sweeping the world today. In Australia, you won't be able to get the old globes. They're all LEDs. And the reason for that is because it uses 1/6 the amount of electricity. And LEDs essentially is sweeping the world. Now, the other sector that's driving the growth is also in the lithium battery industry. So this is a very exciting growth stage. Not a lot of people understand that high purity alumina is added to lithium batteries. They use high purity alumina in the separators of the batteries, and more high purity alumina is added in the anode and the cathode of the battery. So the growth curve for high purity alumina is very similar to lithium going forward.
Where are you getting the product from? Where is the project? Where's the high purity alumina coming from? Is it here in Australia?
Yeah, so currently high purity alumina is produced by chemical companies around the world, and their feedstock is actually aluminium metal. They use aluminium metal, they buy it, very expensive feedstock, they dissolve it and they go to alumina, right? Now, if you think about it, where does aluminium metal come from? It comes from the bauxite process. They make smelter grade alumina, and then they sell it to the aluminium refineries at a lot of electricity and costs, and these guys buy it and bring it back to alumina. So it doesn't make sense because it started as an alumina in the first place. And the reason they can't use that is because of the purity of that smelter grade alumina. Now, our technology basically bypasses the aluminium metal stage. Right? So my question to you is that if you have technology that can go straight from the ore to the high purity alumina in one single step, right, bypassing the aluminium metal, will you be disruptive to the whole industry, and will you be the cheapest cost producer in the world? Essentially, our technology does that. We take the ore to the alumina in one single step. But we don't start with bauxite, Kerry. We start with kaolin. Now, I don't know whether you have a geological background, but kaolin is actually a very white material because Mother Nature has leached a lot of the impurities out. So people use kaolin for paper whitening, cosmetics, ceramics, etc., for its whiteness. We use the kaolin for the alumina content. We have a deposit in Meckering in Western Australia. It's got about 250 years of mine life material, and we use that kaolin as our feedstock. Now, the beauty of that is that our cost is much lower because we don't have to buy aluminium metal. The kaolin feedstock is essentially free because we own the tenements, and it's really the cost of extraction as our feedstock. So you can really see by a disruptive technology, we are going to be the cheapest cost producer of high purity alumina in the world.
Well, that's quite a story. So let's talk about some news flow, some timelines around here. If you own the project, and I think you said it has a 250-year mine life, that's massive. Yeah. Whereabouts are you in the process? Because it sounds to me like you're not really a resources mining company, you're a technology company. Would that be correct?
Essentially a technology chemical company. And so what we do is we take our kaolin and we process that kaolin into high purity alumina in Malaysia, in Johor. So our proposed plant is in Johor. We ship the kaolin to Malaysia. And the reason we decided on Malaysia essentially is competitive costs. We have very cheap power, hydrochloric acid, and it's really the center of transshipment to Asia, because most of our market's going to be Asia. And so the site that we have in Johor, we also have government incentives. So we have a 10-year tax-free window. And so what we've been doing, we have completed all our feasibility studies. We've completed the EPC contract with a German group, and I'll come to that in a second. But essentially, where we are is that we've commenced the construction process. We've raised about 40 million in the last few years, and we commenced the construction process. Our project funding hasn't been completed. It has been delayed with COVID, but essentially we've got onto the construction. Now, why is that important? It's because in any greenfield site, there's always a risk of getting on and getting your permits and environmental permits and so on, and ground conditions. What we decided as a board is to commence that process. So we've completed stage 1 and stage 2 of the construction. We've got onto the site, we built fencing, we underground tanks, we've built a very large workshop facility, and also a big substation. So a lot of that has been done. And what is done by doing that is that we understand the ground conditions, we understand we've got permits to get on site, and essentially that project will have a running start when the final project finance comes through. So that's the production facility. We spend a lot of time now on getting the financing package together. So out of the amount of 400 million US is the use of funds that we're targeting. 190 million is already been resolved with a loan, a senior loan from KfW Apex Bank. It's a German bank. And of that 190 million, 170 million is export credit finance. What that means is we have a very cheap, long tenure loan, and essentially it's underwritten by the German government, all right? So it took us a long time to get that through extensive due diligence, but essentially that 190 million is done. The balance of that is roughly 100 million of secondary debt and another 100 million of equity. So on the secondary debt front, we've been working with Macquarie Bank out of London. We've got through a lot of the process, but Macquarie Bank wanted some of the offtake to have a fixed price. So we are now talking to strategic parties on that. I think I mentioned before in our dealings is that we have an offtake with Mitsubishi. They have a 10-year offtake with the rights to buy all our product. So that offtake's done. I've also mentioned that the project will be built by a very large German company called SMS Group. And in that contract, they will give us a fixed price lump sum contract. So as you know, Kerry, there's a lot of risk in building projects. There's always risk in capital cost blowouts, the plant not reaching the targeted throughput or the quality. We've negated all that risk by teaming up with SMS Group. What they will give us is a lump sum contract. They will give us throughput guarantees. If the plant doesn't perform at the 4,500 tonnes per annum, they will fix it, and they will guarantee that the product meets Mitsubishi specifications. So extensive guarantees and warranties with that contract. So it took a long time to get all those in place. So we've got the contract in place, we've got the senior loan in place, And now we're working on the secondary debt and the equity. We also recently announced that we are going to pursue the listed green bond market for the secondary debt. So if Macquarie doesn't come through, we've got a backup plan. And I'm not sure whether you know about the green bond market, Kerry, in Europe. A lot of Europe are very focused on investing in green projects that help climate change. And they call that, green projects. Now, recently we got accredited as a green project from Cicero, which is a Norwegian group that accredits projects worldwide. So we got a green stamp for that. Now, why did we get a green stamp when we're a mining chemical company? Well, essentially, we can produce the same ton of HPA at half the CO2 greenhouse gases.
Wow.
So 49% less CO2 greenhouse gases to make 1 ton of HPA. So why is that? Because we don't use aluminium metal. Aluminium metal has a lot of greenhouse gases from electricity, etc. The fact that we use kaolin means that our CO2 content is half. We also use about 41% less energy to make HPA. So from that perspective, the whole project has been accredited as a green project. Now, what that does, it allows us to get secondary funding through the bond market. And essentially, it's a debt instrument. It goes out to the public, and people subscribe to the debt instrument, and it's listed on the Frankfurt Stock Exchange. It's a listed green bond, essentially. And investors in Europe are very interested in green bond projects, as well as the coupon rate, which, as you know, in Europe is probably running at 0 to negative. So we've been focused on a lot of the financing, and obviously COVID has slowed that down. But fundamentally,
sorry to interrupt you, Iggy. I was going to ask you about that because you said that earlier that COVID has had a bit of an impact. In what way has that slowed you down? Because surely you just go out, you can talk to people like what you and I are, or what's the slowdown? Yeah,
so I mean, obviously, in project financing, when there's uncertainty in the world, everything slows down. A lot of bank or strategic parties have sort of slowed their activities down until they've dealt with COVID. So, well, that's just how it is. But essentially, we haven't changed our optimism. I mean, high purity alumina hasn't changed. The fundamentals are still there. In fact, we think that post-COVID, there's so much money going to go into stimulating economies, and you see it in Australia, and it's moving to these sectors, EVs, lithium batteries, and so on. And we're in that sector. So one of our long-term plans, the second plant, is in Europe, because a lot of people say to me, well, if the demand is actually as you say it is, where would you build your second plant? Well, we think Europe will be our second plant. And the reason for that is that, I don't know whether you're aware, Kerry, but there is a EU regulation that by 2020, all car manufacturers need to meet a 95 gram per kilometre CO2 standard, all right? They have to average below 95 grams per kilometre. Now,
by when? Sorry, Iggy, by when?
2021, I think it is, yeah.
Okay. So next year.
Yeah, and if you're producing a diesel car, I think that's about 200 odd grams per kilometre of CO2. Petrol engine about 140. So to average below 95, half their fleet have to be EVs, okay? Wow. And so you see a lot of European car manufacturers moving to EVs. Why? It's because if they don't meet that standard, they will be fined for every car they produce nearly 2,000 euros.
Wow. Okay. Interesting.
Yeah. So.
Yep. Go on.
So because of that, a lot of European car manufacturers are now retooling a lot of their factories towards EV models. And they want all their materials coming from Europe. They don't want to be relying on China or Asia. So consequently, all the raw materials that go into these things are now being sourced from Europe. So there are many battery plants being built in Europe, and they are looking for all that materials coming from Europe rather than Asia. So that's why we have an option to purchase a land in East Germany, in Schwarzer Pampa, and that will be where our next plant will be.
Well, you say, but you're talking about a mining chemical company, and we discussed earlier the fact that you're taking out a significant portion of the process of getting to high purity alumina. My question is, are there other companies doing this, or is the technology unique to Altech? So
the chemistry itself, kaolin to alumina using hydrochloric acid, has been around since the early 1900s. So the chemistry is open chemistry. And what we've done is, because of the demand of high purity alumina, we've used that chemistry and applied it to our deposit in Meckering, and it works really well. It produces high purity alumina at a third of the cost. So, and obviously we are the first in the industry, and there are many people following us. So the whole industry is being developed. There are other companies at various stages. We are the most advanced, and we are getting to the hard phase of actually funding the project. And as you know, Kerry, funding a project is very difficult. So, but fundamentally, we have good partners. We have these very high value banks supporting us, and it's just a matter now of finalizing the debt process and the equity process.
Well, let's talk about that as well. What do you think the timing is of that? And do you think the market has recognized how close you are? Because I guess once you've got that debt and equity funding in place, then it's all systems go, is it? And what's your timeline on that? So
yeah, absolutely. So one of the strategies is, a bank like Macquarie says we want some of their material at a fixed price. Now, obviously, chemical products is very difficult to get a fixed price for a chemical product. All right. So what we've been focused recently is to specialize our HPA into the lithium battery industry. So rather than high purity alumina as a commodity that is used in lithium batteries, we are putting some smarts around our product that is specialized, utilized in the lithium battery. Now, I'll give you an example. Recently, we announced some breakthrough where we believe we can coat the graphite particles with alumina. Okay. Why is that important? I don't know whether you realize that in any lithium battery, 8% of the lithium is lost in the first cycle. So before the customer even gets the battery, as they charge the battery, the lithium goes from the cathode to the anode, and then it goes back. 8% of the lithium is left in the anode, and it becomes inactive. So what happens is that the graphite particle, lithium absorbs onto it as a layer, and then it becomes inactive. Now, imagine losing 8% of your active constituents before you start the cycle of the battery. Yeah. And this is, so the industry has been trying to resolve this problem. It's called the first cycle loss, all right? And they've been trying to coat graphite with alumina. So we have technology that can actually coat our alumina onto the graphite. And if it actually works, we think that the battery will be 8% higher in density and maybe 20 to 30% in longer life. So we are tailing our HPA with secret spices and then applying to the lithium battery industry. So it gets higher value add, and it gets it away from being a commodity. So that's what we've been focused on. And if we can have joint venture partners in the downstream process, then we can resolve some of the offtake as a fixed price for our debt funding. But that's from the Macquarie side. The listed green bond process is a different process, and that'll run. And we think that by end of quarter two next year, that sort of process will complete, and we will know how much we raise from the green bond process.
So if once that sort of that debt and equity funding, are you saying that probably middle of next year that will be resolved? Because then I get, yeah. Is that really right now, in your opinion? Do you think that that's potentially why people are holding back a little bit from the investor point of view?
Absolutely, yeah. I mean, this is really the key stage of finalizing the project, is the final project finance. And I guess, you know, once we've just recently announced a rights issue for 14.5 million, of which our two major shareholders was underwritten that. So once we raise that money, we will then have enough money to carry on to the next stage into the green bond process. During COVID, I guess we were limited in our funds, but now we are going to raise the money and then be able to proceed with the project funding. So we're looking forward to a very exciting stage. Yes, it has been difficult, but the fundamentals have been there. Nothing has changed on HPA, and we are looking forward to getting this project financed.
That's your main thing, isn't it? Get that damn project financed so we can get underway. So for those investors that are listening out there today that have just come across Altech Chemicals, what would you say to them as to why they should be taking a very good look at Altech as a potential investment opportunity?
Kerry, as you know, I was one of the trailblazers in the lithium industry with Galaxy Resources, and I built the Mount Cattlin and the lithium carbonate plant in China. And all those years ago, I was educating the market on lithium. So a lot of the fund managers were saying, well, what is lithium? And I was educating the market to say, look, lithium is going to be the future because of lithium batteries in China, et cetera, et cetera. So this is exactly the same thematic as lithium. I could see exactly the same things happening with high purity alumina. And I'm educating the market. I am the lead in the HPA market. It is a hard slog to educate it, but the demand is exactly the same. What is driving it? EVs, battery storage, LEDs. The fundamentals are there. And it's just that for an investor, we're at a great price today. And the future is that we get this project funding. The best part is that we've already commenced, we acquired the sites, we purchased the sites, we've already started the construction process, etc. So we are well down the track, and we'll have a running start when we get the project finance.
And you own 100%, you own the Meckering project over there in WA. So you've got the feedstock, it's very long life, 250 years. So that's done. The construction is underway, some funding to get in, but right now we've just educate the market, and then you know, the next stage is well underway.
Yes, absolutely. Thank you, Kerry, for your time.
Great to see you, Iggy. Thanks for talking to Small Caps today. And you know what? We'll bring you back on next year to find out how it's all progressing with the funding. Thanks for chatting to us.
Thanks for your time, Kerry.